going to continue our multi-candle coverage. The next one is going to be on the dark cloud cover. Please pay attention, take notes. There will be a test. Today's pattern is called the dark cloud cover. The dark cloud cover is a 2-candle reversal pattern occurring at market tops only, making it a bearish reversal pattern. The price action leading to a dark cloud cover must be an uptrend. Ignore the pattern in a sideways or a downward trend. Price must be trending upwards. The first of the candles continues the upward trend, and because it's an uptrend, the candle is green, as bulls continue to drive prices higher. The second candle is a red candle, opening above the body of the green candle. So prices close on the first green candle here, and the next day they gap up above the high point of the preceding green candle to open here. The second candle then closes down below the midway point of the green candle as seen in this diagram here. The 50% line marks the midway between the open and the close of the green candle and the red candle. Now must close below this point. Again, the 50% line marks the midway between the open and close of the green candle, and the red candle must close below this point. Confirmation of the pattern is price trading below the low of the red candle here. As always, more conservative traders might wait for a complete candle body close below of the low of the red candle, or even the low of the green candle here. Now let's look at the psychology of the dark cloud cover to see who's in control, the bulls or the bears. Well, if our only indication was just the name, then when dark clouds cover, they usually bring rain, and rain falls in which direction? Down. Well, let's look at the sentiment. The first candle continues the uptrend and everything is looking bullish. The second candle ideally gaps up at the open. However, price hits an area where the bulls are no longer willing to come into the market at these high prices. And some of them from yesterday may even be considered taking profit. The bears find this halt in rising prices attractive, and they want to enter the market in full force. The balance of supply and demand has tipped now in the favor of the bears. Selling increases and prices fall. The key to this pattern is the downward move and the close below the 50% level of the green candle here. This is considered the balance point for bullish and bearish sentiment in the first green candle. On the second candle, the bears were able to push the price back down below the central balance point of the green candle and then close prices in this lower area. Now, this move could potentially shake the confidence in the bulls, motivate them to now become sellers, especially when there's confirmation of this pattern here, with price trading below either candle, and could potentially lead to a reversal in the pattern to a downtrend. Now, if you've been following our series, then you remember the process of candle addition, where we combine the price movement of multiple candles into one single candle. For example, these two candles that represent the dark cloud cover on a 1-minute chart. If we wanted to see this on a 5-minute chart, through the process of candle addition, these two candles that represent the dark cloud cover on a 1-minute chart would now look like this one candle here on the right, on a 5-minute chart, displaying the exact same information. Our first green candle opens here, goes to the low here, and then to the high here, and then closes here. The second candle gaps up and opens here, goes to the high and then to the low, and then closes here. All of this movement is represented in this one candle here on the right. The body consists of the open of the green candle and the close of the red candle. The bottom tail is the lowest point the price hit. The upper tail is the highest point that the stock price reached. An exact replication of the story of these two candles. Additionally, being that a dark cloud cover occurs at the top of an uptrend, through candlestick addition, a dark cloud cover becomes anyone? Bueller? It becomes a green shooting star. A bearish reversal pattern. So if you're looking at a price action and you want to know who's in control, the bulls or bears, use the process of candlestick addition, and this way you can see what insight that gives you. In this example, we have an uptrend leading right into a dark cloud cover. The red candle gapping up above the previous day's green candle and then closing below the 50% level of the green candle. A classic dark cloud cover. Price trading lower than the pattern here gives us confirmation. And then we have a trend reversal to a downtrend. And on this chart, we have an example where the dark cloud cover has failed. We have an uptrend leading into a beautiful dark cloud cover with the red candle gapping up above on the open and then closing just below the 50% mark on the green candle. And then we have confirmation with price trading below the pattern. Now, the reason I'm showing you this is because, like I've stated numerous times before, there are no guarantees. Let's go down the list, shall we? We have trend, check, uptrend. We have the pattern, check, dark cloud cover. We have confirmation, check, but the trend does not hold. In fact, it goes sideways a few days before running into this red shooting star. The fact that this trade initially would have gone against us is in fact not a bad thing at all. You're not going to be right all the time, and that's okay. But at least if you know what 3 things you're looking for: trend, pattern, confirmation. When the stock all of a sudden does the opposite, that's also a good indicator. It's time to get out of the trade. Exit, boogie, break, get out of there, get out of Dodge, run. Okay? You want to do this, maybe you might break even. If you're lucky, more than likely you're going to have a small loss, but you'll live to trade another day. So knowledge and discipline will make you money and keep your losses to a minimum when you follow rules.